Good morning, everybody. Hey, welcome to the last Monday of March 2020. Before you know it, April's here. So I want to thank you for joining us today. I know that it is crazy, hectic out there of all the stuff that's going on, all the news media, and just all the stuff that we're ingesting right now is making a huge impact on all of us. And so I hope you'll take some time away from some of the news media stuff as we look at where we're at today. I know it's a lot going on. Hopefully, Dave and I will be able to bring a little bit of relevance today to what's happening in the marketplace. The CARE Act that was passed on Friday, signed into law by the president, and so we'll talk about that a little bit, as well as what's happening in the market. And looking forward to our conversation with Dave here. Just a minute.
John, wait. Don't see many people around here after the other morning show leaves each day. You're darn right I miss you. I am not lonely right now, though. It's time to check in on your finances and find out what's going on this morning. We have Phillip Statler from Statler Financial Services on the line. Phillip, good morning. It's good to hear another voice in here this morning.
Hey, good morning, Dave. Hope you're doing well. Hope you had a great weekend. We finished up the week last week with finally a positive gain for the week. Now, we didn't end up well on Friday. We didn't start well on Monday, but in between we did pretty well. And
one of the reports was saying this is the best week that the Dow has had since back in the 30s. A 915-point dump on Friday generally doesn't give you that feeling, but that's kind of like three-putting after a round of 58 or something, doesn't it?
Well, it does. And the other thing to look at, too, is that it's the first up week we've had in, I think, 4 or 5 weeks.
Absolutely. It's good to have a good week, but we're looking ahead to the week ahead, and volatility may very well continue, wouldn't you think?
Yes, sir. I think that we are still, we've seen it overnight, right? We saw the futures down over 800 points on the Dow, and now we're in green territory the last time I looked.
Yeah, we're looking at like an 800-900 point swing on the futures, so it's painfully obvious Wall Street doesn't know what it wants to do today. And my guesstimate would be that we're going to have a lot of on-hold current events notwithstanding. If something happens that surprises us one way or the other, it could change. But I got a sneaking hunch we're going to be all over the place until we get a picture on Thursday for those first-time unemployment claims that we're not expecting to be a good news at all. And then you reminded me, that's right, Friday we're going to be getting the official unemployment rate, and you're hearing dire predictions as to what our unemployment rate could look like, aren't you?
Yeah, I'm sure that it's going to be, I don't have any consensus estimates hit my board yet, but I have a feeling it's not going to be pretty.
No. Last week we had about basically 10 weeks worth of first-time claims all in one solid week, and everybody's kind of expecting about the same thing to happen this week. Last week we reflected all of the service industries, the waitresses and bartenders that got put out of work. Now we're looking at all the retail employees that got put out of work last week on furlough. So I pretty well would assume that we're probably looking at another heavy week this Thursday.
I would think so. One of them that hit across my wire was Lazy Boy. They're going to furlough basically 6,800 workers. They're cutting the pay of their senior management by 50% and their salaried workers by 25%. So, and they cut their June dividend and their repurchase deal. So, that's, I think, something we're going to continue to see, Dave, is that the companies that have always paid dividends, this may be the time where we see them starting to pull back. And for all those people that were dividend stock buyers, this is going to hurt them tremendously.
Oh, absolutely. It's coming in waves. The first wave was last week from 2 weeks ago when we closed the service businesses. The retail stores started closing up last week, and that's going to hit us this week. Now we're starting to see the manufacturing concerns shutting down because, well, they don't have any stores to sell their stuff through, and it's going to be a spiral. I said the other midweek last week, the definition of a recession is 2 quarters in a row with a down economic tick. Even if this was only a 30-day lockdown, and it looks like it's going to be a little more than that, we're pretty much destined to a recession only on the grounds that we're going to kill 2 weeks of the first quarter and at least 2 to 4 weeks in the second quarter. I don't see any way out of a recession at this point as far as reading is concerned.
Well, yeah, by definition, you're right. I don't see us getting out of it either. I think that by definition, we will have or be in a recession when we come out of the second quarter into the third. The question is going to be really and truly, how mild is it? How hard is it? Those type of questions. How fast can we rebound and get back to growth?
The thing is, there is one thing at the very least, historically at the very least, fast, steep recessions normally, and rules are always off, but normally at the very least, a steep downtick follows by a steep recovery anyway.
And we definitely hope so, Dave. You know, that's the one thing we'll have to keep our eye on to see how well it does bounce. But the question still remains, how long are we going to be there, right? So the president came out yesterday, I believe, in his commentary and said, look, we're going to extend the social distancing requirement for 30 days till the end of April. You know, he was talking last week about, hey, we're going to get this economy going again. We're going to open up parts of the country. I can see that his health consultants have gotten to him and have changed his mind on that.
Yep, I was saying last week that I kind of saw that open up the country by Easter as aspirational more than predictive, and I hate to say it, but the aspirations didn't work out the way he'd hoped.
No, definitely not. And so, you know, and we continue to see increasing numbers even here amongst ourselves here in Highlands County.
Yeah, here in Highlands County, we're up to 12 confirmed cases here. I've been watching the curve of new cases on the national charts. Now, this would be, I'm going to call it aspirational instead of predictive too, but it looks like the number of new cases on the national front starting to, at the very least, level off just a little bit. But then there's those hot spots that unfortunately include the Miami-Fort Lauderdale corridor, and that is making like the state of Florida nowhere near seeing that leveling off effect yet on an individualized state-by-state basis.
Well, that's right. We're going to continue to see that in those hot spots. And the question is going to be, how fast and does it really cover the rest of the United States? And when it does, will we see that same type of growth once it starts to reach? Because there's still some states that don't have a lot of cases yet.
Absolutely. I was checking my home state of Wisconsin. It's relatively quiet, except in the immediate Milwaukee corridor. There's a whole pile of counties up there that have absolutely zero. My daughter lives in Green Bay, in a county with a 250,000 people in it. They've only got like 3 to 5 cases. There's a lot of areas that have not been hit yet at all, and that's because they're somewhat isolated from the metropolitan areas that are relative hotspots for their corridors. So we've got a lot of areas to develop still, as well as the virus continues to make its run. Other news that we're catching, Yum Brands, one of the big restaurant suppliers, their CEO is going to forego his salary. They're giving each of their managers, at the very least, for the stores that have been closed, a $1,000 bonus. Got word that the Ulta beauty chain, we got one of those in this town, announced they're going to shut down their stores for the foreseeable future. Really, we don't have a lot of news that affects the market, but none of the bits of news that we're getting is very good, is it?
Well, no, but the one thing you do have to remember is that they did finally pass, the House passed the CARES Act, and the president did sign it into law on Friday, meaning that that folks should start to hopefully see their checks or deposits arrive in the next 2 to 3 weeks. Hopefully that's not too optimistic, but I know that there's a lot of folks that's going to help.
Yeah, I've got a couple of people in my own family that were put out of work up in the Twin Cities area called me the other night and said, "What do you hear? When are we going to get a check?" And I said, "Well, Mnuchin said 3 weeks. Believe it when I see it, but at the very least, we know they're moving about as fast as the federal government can move." We do have one interesting thing, and it hits a hot button around here. I was reading on Facebook, everybody's having trouble finding eggs these days, relatively speaking. Big egg producer did have a report this morning, didn't they?
Yeah, they did, Dave. Cal-Maine Foods, the nation's largest egg producer, they came out with 28 cents a share earnings. That's 10 cents better than expected. Revenue beat the forecast. And here's what I find interesting. They are not seeing any supply chain disruptions resulting from the coronavirus. And so I think that's a good sign, though we'll see how well that is able then to go from the producer to the grocery store.
Now, the biggest problem they've got is the fact that the consumers are buying everything they can lay their hands on, right?
Yeah, it definitely seems to be that way. I mean, every time I walk into the store, and I try not to walk in very often, but man, especially the paper goods aisle is just devastated. There's nothing there. And even in the meat department, there's very little there to choose from. So I find that interesting that still, 3 weeks, 4 weeks into this now, we still are, I don't know if we're hoarding or what the deal is, but we still are not having a lot of stuff on the shelves.
Yeah, the supply chain disruption is on the consumer end of the stick. That's without a doubt. I did about the same thing, did a little bit of grocery shopping quick early on Sunday morning before anything else, before the crowd started hitting. And it was slim pickings, I'll tell you. It was not funny. Let's see here. Other facts, just I do notice, Phillip, that the interest rate yields on 10 years and 30-year Treasury notes heading back down again. The Federal Reserve buying those federal bonds so far was propping up interest rates for a little while, and that's affecting mortgage rates.
Yeah, it is. The other thing I did see, Dave, and I found this quite interesting. I didn't get a chance to dive into the article, but there was a little headline that said, "Don't be surprised if the Fed doesn't start buying stocks."
Ooh.
Yeah, that kind of took me by surprise.
That would make that'd make Bernanke look like a piker if the Fed started buying stocks.
Yeah, I mean I don't know what the criteria is or any of the druthers there, but I did see a headline that was not something that was off the table.
That almost leaves me speechless. Resetting the table for the morning. Friday was, well, everything being relative to what we've experienced, not a bloodbath, but it stunk. There's no doubt about that. Dow was down 915 points on Friday. NASDAQ down 295. Standard & Poor's was down by 88. Once again, though, capping out the best week that the Dow has had since back in the 30s. So on balance, it was a good week. 45 minutes before real money gets thrown around this morning, Phillip, what do the trends look like so far?
Well, right now, Dave, when we look at the stock indexes, the equity indexes, they're all pretty much green right now, and they've done pretty well. They're giving back a little bit right this minute, but the Dow's up almost 0.7%, $137. The S&P 500 is up almost 1%, $23. And the NASDAQ is up 1%, $78. So we're seeing things rise there on the futures market. On the other side of the coin, the commodities not so much. So we see silver down, again, 2.8% to $14.12 an ounce. We see gold down 0.75%, $1,642 an ounce. And we see crude oil down 4.25% to $20.60 a barrel.
All right. Overseas markets, Asia was kind of rattled by our Friday. Those indexes were all down at the close. Europe kind of looking at our futures and getting a bit of a different picture. They're mixed in Europe, but everything is within less than 0.5 point of the zero line in Europe at this hour. I did notice the 3-month Treasury notes from the federal government, Phillip, still in negative interest range. The yield is minus 0.06%. So we're still in that weird territory in the bonds, aren't we?
Yeah, we are, and it's I'm not sure when that's going to turn around. Probably when this virus thing is over and we get a little clearer picture of what's going on.
Understood. There are tons of ways to get solid financial advice from Statler Financial Services, and you can do it social distancing as well, Phillip. How do I start out by making contact with you?
Absolutely, Dave. And give us a call at 863-382-0037. We can do phone appointments. We can do Zoom appointments. There's all different ways that we can communicate. We still have office hours right now. I'm not sure how much longer based on what we're seeing here in Highlands County, but at least at this point we are. So those are some ways you can get a hold of us. Follow us on Facebook because we'll post some stuff there. If we're going to do a little virtual meeting, it'll get posted there. Statler Financial Services, like our page and follow us there, and you'll get notified when those type of things happen. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
All righty, and back again here tomorrow morning on Light FM. Phillip, thank you so much. Let's cross our fingers for a good day, shall we?
All right, man. You have a great day. I'll talk to you tomorrow.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember.
Hey, folks, again, I want to thank you for joining us today. I hope that your weekend was well. Be safe out there. If you have any questions, any concerns, anything that I can help you with, please give us a call, 863-382-0037. That's 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.